investment. What's up, guys? Welcome back to the channel. All right, before we jump into today's update, quick reminder, this is not financial advice. I'm not a financial advisor. Investment, I'm not telling you to buy, sell, hold, or do anything with your money. We don't give dates, we don't give rates, and we don't deal in hype here. Investment, everything we talk about is based on publicly available information, trends, and logical scenarios. You make your own decisions. Now, with that out of the way, investment. Today we're talking about something that sounds simple on the surface, but is actually extremely important: updates on the official exchange rate. Not rumors, investment, not back channel stories, not what somebody's cousin heard, the official rate. The number recognized by Iraq's central authorities and used in government transactions, investment, a trade accounting, and formal banking operation. So why does this matter so much? Because the official exchange rate is the anchor of the entire monetary system. Investment, it affects imports, exports, government budgets, inflation, purchasing power, banking stability, everything. Even if you never touch foreign currency personally, investment, the rate influences the prices you pay for goods, fuel, food, electronics, construction materials, all of it. Now here's where things get interesting. Investment. In many countries, the official rate and the market rate are basically the same. You walk into a bank, exchange money, done. But in countries undergoing economic transition like Iraq, investment. You can sometimes see a gap between the official rate and what people actually pay on the street or in informal markets. And that gap tells a story. If the gap is small, investment, it suggests confidence in the official system. If it widens, it suggests stress inefficiencies or demand pressures. Investment policymakers watch this very closely because it's essentially a real-time report card on currency credibility. Think of it like this. Investment, imagine a store sets the price of a product at $10, but outside people are buying and selling it for $12. Investment. That difference means demand is outpacing the official supply channel. Something in the system isn't aligning. Now apply that concept to an entire national currency. Investment. So when we talk about updates on the official exchange rate, we're not just talking about a number, we're talking about stability, trust, and control. Investment. Another thing to understand is that changing an official rate is not like flipping a switch on a calculator. It has consequences across the entire economy. Investment, governments don't adjust it casually because every adjustment redistributes economic pressure somewhere. Strengthen the currency too quickly and exports can suffer. Investment, weaken it too much and imports become expensive, fueling inflation. Hold it steady while conditions change and imbalances can build. So policymakers walk a tightrope. Investment. Now, one of the biggest drivers behind official rate policy in Iraq is imports. Iraq imports a massive amount of goods, from food to machinery to consumer products. Investment. That means access to foreign currency, especially dollars, is critical for businesses. If importers can't obtain foreign currency through official channels easily, investment, they turn to alternative markets. That increases demand outside the system, which widens the gap we just talked about. To address this, investment, authorities often implement mechanisms to regulate currency flows, auctions, electronic platforms, compliance requirements, and oversight measures. Investment, the goal is to ensure that foreign currency goes to legitimate trade rather than speculative or illicit activities. From a policy standpoint, that makes sense. Investment, but from a business standpoint, it can create friction, more paperwork, more verification, more delays. And when time equals money, businesses look for faster options. Investment. So part of the ongoing challenge is balancing control with accessibility. Now let's talk about inflation, because this is a huge piece of the puzzle. Investment. If the official rate weakens, imported goods cost more in local currency terms. Since Iraq relies heavily on imports, investment, that price increase filters through the economy quickly. Food prices rise, transportation costs rise, construction costs rise, everything feels it. On the flip side, investment, a stronger official rate can reduce import costs, which helps consumers. But again, it has trade-offs, especially for domestic producers who compete with foreign goods. This is why central banks often prioritize stability over dramatic moves. You'll hear officials emphasize words like balance, sustainability, and market alignment. Those aren't just buzzwords. Investment, they reflect the complexity of managing a modern economy. Now, here's something a lot of people don't think about. Government budgets are also tied to the exchange rate. Investment, Iraq earns most of its revenue in foreign currency from oil exports. When those revenues are converted into local currency for domestic spending, the exchange rate determines how much purchasing power the government has internally. So a rate change affects public salaries, infrastructure spending, social programs, Investment, everything funded by the state. Imagine earning income in dollars but paying expenses in another currency. If the conversion rate changes, investment. Your entire financial picture shifts even though your dollar income stayed the same. That's exactly what governments deal with. Another factor is debt obligations. Investment. Some debts are denominated in foreign currency. Exchange rate movements change the real burden of those debts. So again, every adjustment creates winners and losers. Investment. Now let's step back and talk about why there's so much attention on updates right now. Investment. Partly it's because Iraq has been working toward economic stabilization after years of volatility. Banking reforms, anti-corruption measures, modernization efforts, investment. And attempts to integrate more fully with global finance all play a role. When a country signals reform, people start watching its currency more closely. Investment. They want to see whether policy shifts follow structural improvements. But reform doesn't always mean immediate rate changes. Investment. Sometimes reform is about preventing instability rather than creating dramatic moves. Let me give you a real-world analogy. If a doctor puts you on a strict health plan, investment. Diet, exercise, medication, the goal isn't necessarily to transform you overnight. It's to stabilize your condition first, then improve it gradually. Best economic reform works the same way. Another angle people discuss is expectations. If citizens believe the currency will weaken, investment, they may convert savings into foreign currency as a precaution. That behavior itself can increase pressure on the system. Conversely, if they believe stability will hold, investment, they're more likely to keep funds in local banks. So managing expectations is part of managing the currency. This is why official statements matter. Investment. Even when they sound repetitive, reassurance can influence behavior. Now here's where speculation often enters the conversation. Investment. Whenever authorities implement tighter controls on currency movement or introduce new financial systems, some people interpret that as preparation for a rate change. Announcement, others see it as routine modernization. Both interpretations circulate at the same time, especially online. The reality is that many reforms serve multiple purposes. Investment, they can improve transparency, reduce illicit flows, strengthen compliance, and enhance monetary control, all without any immediate rate adjustment. Investment, but they also create the capacity for future policy flexibility. Think of it like upgrading the electrical system in a building. You might just want reliability. Investment, but you also gain the ability to handle higher loads later if needed. Now let's talk about the psychological aspect again because it's powerful. Investment, people want turning points. They want clear moments where everything changes. But economic policy is usually incremental. It moves in steps, sometimes forward. Investment, sometimes sideways, occasionally backward, and from the outside those steps can look slow or even invisible. Yet over time they add up. Investment. One thing to watch is consistency. Are policies coordinated? Are reforms sustained across political cycles? Are institutions strengthening rather than weakening? Investment. Consistency builds credibility, and credibility supports currency stability. Now I want you to imagine a scenario. Suppose Iraq continues improving banking compliance, investment, expanding digital payments, strengthening oversight, and maintaining stable inflation. Over time, confidence increases. Businesses rely more on official channels. Investment. Citizens trust banks more. The gap between official and informal rates narrows. In that scenario, the official rate doesn't necessarily need dramatic adjustment. Investment. Stability itself becomes the success story. But if conditions change, say oil prices shift significantly, regional tensions escalate, or global markets fluctuate, policymakers may reassess. Currency policy is dynamic, not static. Investment. And that's why updates on the official rate are worth paying attention to even when nothing dramatic happens. Because no change can be a deliberate decision. Investment, it can signal that authorities believe the current level supports economic balance, or it can signal caution while waiting for clearer conditions. All right, guys. Investment. Let's jump right back into it. Again, quick reminder, this is not financial advice. No dates, no rates, no guarantees. We're breaking down public information, investment, logical scenarios, and how the official exchange rate fits into the bigger financial picture. You always make your own decisions. Investment. Now in part one, we talked about the official exchange rate itself, what it means, why it matters, and how it affects inflation, imports, government budgets, and public confidence. But now we need to go deeper. Because the official rate doesn't exist in isolation. Investment. The official exchange rate is deeply connected to the banking system, international trade flows, and global financial infrastructure. Investment. If you don't understand those connections, it's easy to misinterpret updates. Let's start with the banking system. In Iraq, Investment, like in many developing or reforming economies, the central bank plays a major role in supplying foreign currency to the domestic market. Investment, this typically happens through structured mechanisms where banks and authorized entities access foreign currency for trade and legitimate needs. Investment. Now think about what that means. If a business in Iraq wants to import machinery from Europe or food products from Asia, it needs foreign currency to pay that supplier. Investment, it goes through official banking channels to obtain it. If that process runs smoothly, the official exchange rate remains relevant and trusted. Investment. But if that process becomes restricted, slow, or heavily regulated, pressure can build outside the system. And here's where compliance enters the picture. And investment. Over the past several years, Iraq has been under increasing pressure, both internally and externally, to strengthen anti-money laundering standards, and improve financial transparency, and ensure that foreign currency isn't being diverted for illicit activities. That's not unique to Iraq. Globally, investment. Financial systems have tightened compliance dramatically, but here's the trade-off. Stronger compliance can slow transactions in the short term. More documentation. Investment, more verification, more oversight. While that improves long-term credibility, it can temporarily reduce liquidity in official channels. And when liquidity tightens, investment, the difference between official and informal markets can widen. So when you see new banking regulations or stricter oversight measures, investment, some observers interpret them as stress points, others see them as long-term strengthening measures. The truth is they can be both. Investment. Now let's talk about international relationships. The official exchange rate is not just a domestic policy tool. Investment. It's also part of Iraq's interaction with global financial systems. When Iraqi banks conduct transactions internationally, investment. They rely on correspondent banking relationships. These are partnerships with foreign banks that allow cross-border payments to move efficiently. Investment. For those relationships to function smoothly, international partners need confidence in Iraq's compliance standards and financial transparency. Investment. So improvements in the banking system aren't just about domestic control, they're about maintaining access to global payment networks. If access to global financial channels is restricted, currency pressure can increase. If access improves, stability increases. Now let's zoom out even further. Investment. Global monetary conditions affect Iraq's currency environment, whether people realize it or not. When major economies raise interest rates, global capital flows shift. Money moves toward higher yield environments. That affects emerging markets. It affects currency stability. It affects trade flows. Investment. Even if Iraq keeps its official rate unchanged, global movements can indirectly influence domestic conditions. For example, if the US dollar strengthens globally, investment, it can increase pressure on countries that rely heavily on dollar-based trade. And since Iraq's oil revenue is priced in dollars, dollar strength has complex effects. Investment. On one hand, strong oil revenue in dollars supports foreign reserves. On the other hand, dollar fluctuations impact purchasing power domestically. Investment. This is why central banks don't operate in a vacuum. Now let's talk about reserves. Foreign currency reserves are essentially the central bank's buffer. Investment, they allow authorities to defend the official exchange rate if needed. If demand for foreign currency rises sharply, investment, the central bank can use reserves to supply the market and prevent extreme volatility. But reserves are not infinite. They must be managed carefully, especially in economies dependent on commodity revenue like oil. When oil prices are high, reserves tend to build. When oil prices drop, pressure increases. Investment. So updates on the official rate cannot be separated from oil market trends. If oil revenue is strong and reserves are healthy, policymakers have more flexibility. Investment. If oil revenue weakens or reserves decline, caution increases. Now here's another factor people often overlook: public behavior. Investment. Currency systems are deeply influenced by psychology. If businesses and citizens trust that the official rate will hold, they operate normally. They use banks. Investment. They conduct transactions through official channels. If they fear instability, they may convert savings into foreign currency or move funds outside the system. Investment. That behavior itself creates pressure. So central banks don't just manage numbers, they manage expectations. Investment. This is why you'll often hear officials emphasize stability and continuity. Reassurance matters. Now let's walk through a scenario. Investment. Imagine Iraq tightens compliance measures to prevent illicit currency outflows. At first, businesses complain. Processing times increase. Investment. The parallel market rate drifts higher. Observers online start speculating that the system is under stress. But over time, Investment, compliance strengthens relationships with international financial partners. Transparency improves, illicit flows decline, official channels regain credibility. Eventually, the gap narrows again. In that case, short-term discomfort leads to long-term stability. But from the outside, especially in the short-term investment, it can look like instability. And this is why context matters. Now, let's address something that comes up frequently in discussions about the official rate investment, the idea of sudden shifts. Could the official rate change unexpectedly? Technically, yes. Governments can adjust official rates at their discretion. Investment. But whether they should or would depends on conditions. Sudden adjustments carry risks. Markets react quickly. Speculation intensifies. Investment, public confidence can swing dramatically. If a change is not supported by strong fundamentals, reserves, inflation control, fiscal discipline, banking strength, investment, it can backfire. So while it's possible in theory, in practice, policymakers prefer controlled environments. Another important piece is fiscal policy. Investment. If the government budget is structured around a certain exchange rate assumption, meaning projected oil revenue converted at a specific rate, investment, changing that rate alters the entire budget framework. Public salaries, infrastructure spending, social programs, everything recalculates. Investment. That's not something done lightly. Now here's a subtle but important point. Sometimes maintaining an official rate is itself a strategic choice. Investment, even if external pressures exist, stability can signal confidence and discipline. Frequent changes can create uncertainty. Investment. So, or no change can be just as meaningful as change. It can indicate that policymakers believe the current level is sustainable given economic conditions. Investment. But sustainability is always conditional. It depends on oil markets, political stability, international relations, inflation trends, and domestic confidence. Investment. Now let's talk briefly about diversification. Iraq has long discussed reducing reliance on oil by expanding agriculture, industry, and services. Investment, if diversification progresses, currency vulnerability to oil price swings decreases. In that environment, exchange rate policy gains flexibility. Investment, but diversification takes time. Infrastructure must develop. Private sector growth must accelerate. Regulatory frameworks must strengthen. So again, investment, long-term reform, and short-term rate decisions are connected but not identical. One more scenario for you to consider. Investment. What if the primary goal right now is not to change the official rate at all, but to eliminate distortions between official and informal markets? In that case, management reforms would focus on liquidity, compliance, oversight, and banking modernization. If the gap closes and stability improves, investment, the official rate gains credibility without needing adjustment. That would represent a quiet but meaningful success because credibility reduces volatility. And reduced volatility attracts investment. Think about Iraq's long-term goals for a second. Investment. This isn't just about stabilizing a currency after years of conflict and volatility. The broader vision that's often discussed is rebuilding infrastructure, investment, expanding trade, attracting foreign investment, diversifying the economy, and becoming a central player in regional commerce again. And if that vision is to succeed, currency stability is essential. Not necessarily a dramatically strong currency, but a predictable one. Businesses planning factories, pipelines, logistics hubs, investment, or multi-year projects care far more about stability than about dramatic appreciation. They want to know that costs, contracts, and profits won't swing wildly due to exchange fluctuations. So maintaining a stable official rate can actually be a pro-growth strategy. Investment. Now let's talk about regional integration. Iraq sits between major economic zones, the Gulf states, Turkey, Iran, the Levant, and trade routes connecting Asia to Europe. Investment. There are ongoing discussions about transport corridors, rail projects, energy connections, and port expansions across the region. Investment. If Iraq becomes a transit hub for goods moving between continents, its financial system must be reliable. Payments must clear smoothly. Contracts must be enforceable. Currency risk must be manageable. So again, the exchange rate plays a supporting role in a much larger story. Another factor is competition. Investment. Neighboring countries are also investing heavily in infrastructure and logistics, ports, free zones, industrial cities, digital economies. Everyone wants a share of future flows. To compete, Iraq needs not just physical infrastructure, but financial credibility, and credibility takes time to build. Investment. Now let's talk about foreign investment because this is a big one. Investors don't just look at growth potential, they look at risk. Currency risk, political risk, investment, regulatory risk, security risk. Even if a project looks profitable on paper, volatility can make it unattractive. Investment, a stable official exchange rate reduces one layer of uncertainty. but stability must be believable. Investment. If investors suspect that a rate is artificially maintained and could collapse under pressure, they remain cautious. Investment. So policymakers have to balance stability with sustainability. Now, here's something important to understand. Investment. A country doesn't have to dramatically revalue its currency to become economically successful. Investment. Many strong economies operate with moderate exchange rates, but high productivity, diversified industries, and strong institutions. Investment. So the goal isn't necessarily a big number. The goal is a functional economy. Sometimes people focus on the exchange rate as if it alone determines prosperity. Investment. In reality, productivity, governance, infrastructure, education, and private sector growth matter far more. The exchange rate reflects those fundamentals. It doesn't replace them. Now let's consider geopolitical stability. Currency policy is influenced by regional tensions, security concerns, and diplomatic relationships. If uncertainty rises, policymakers often prioritize caution. Major monetary shifts during unstable periods can amplify risk rather than reduce it. Conversely, investment periods of relative calm provide windows for reform. So when evaluating updates on the official rate, it's useful to watch the broader environment. Investment, not just domestic data. Now let's talk about public trust again, because it keeps coming up for a reason. If citizens trust their currency, they use it. Investment, they deposit money in banks, they transact electronically, they invest locally. That behavior strengthens the economy. If they distrust it, they hold foreign currency, operate in cash, and avoid formal systems. That weakens monetary control. So strengthening trust may be the single most important long-term objective. Investment, and trust is built through consistency. Not one announcement, not one reform, not one rate adjustment, years of predictable policy. Investment. Now here's a scenario to think about carefully. What if Iraq's leadership views the current period as a foundation building phase rather than a transition phase? Investment. In other words, the priority might be fixing structural weaknesses first. Banking compliance, corruption controls, infrastructure, diversification, investment, before even considering major exchange rate changes. From the outside, that can feel slow. But from the inside, investment. It can be the difference between temporary improvement and lasting transformation, because if a country strengthens its currency without strengthening its economy, investment, the improvement can be fragile. Now let's address expectations. Online discussions often swing between extremes. Either nothing will ever change, investment, or everything will change overnight. Reality usually sits in the middle. Gradual improvement punctuated by occasional policy adjustments. Investment. So instead of waiting for a single dramatic moment, it may be more realistic to watch for cumulative progress, improved banking services, better infrastructure, investment, more private sector activity, increasing trade diversification, stronger institutions. Those are the indicators of long-term success. And if those improve, investment, the currency environment improves with them. Another important piece is coordination between monetary policy and fiscal policy. Investment. The central bank can manage the exchange rate, but government spending, taxation, and economic planning influence overall stability. If those policies align, outcomes improve. If they conflict, pressure builds. So successful exchange rate management requires cooperation across institutions. And now let's imagine a positive long-term scenario. Iraq continues rebuilding infrastructure, expands energy capacity, develops agriculture and industry. This improves governance, strengthens banks, and integrates into regional trade networks. Oil revenue remains strong but is supplemented by other sectors. In that environment, the currency becomes more resilient because the economy itself is more resilient. Policy flexibility increases. Confidence increases. Investment increases. Investment. That's how sustainable prosperity develops, not through a single policy lever, but through coordinated progress. Now let's circle back to the core question, investment. What do updates on the official exchange rate really tell us? They tell us how policymakers are balancing stability, inflation control, fiscal needs, trade dynamics, investment, and public confidence at a given moment in time. Sometimes the best decision is to hold steady. Sometimes it's to adjust gradually. Investment, rarely is it to make dramatic moves without preparation. So when you hear that the official rate remains unchanged, don't assume nothing is happening. Stability itself may be the objective. And when adjustments occur, investment, they're usually responses to evolving conditions rather than predetermined events. Here's the grounded takeaway I want you to leave with. Investment. The official exchange rate is a reflection of the broader economic system, not a magic switch that transforms everything on its own. If the system strengthens, investment. The currency environment strengthens. If the system struggles, pressure appears. So instead of obsessing over one number, it's more useful to watch the fundamentals behind that number: oil revenue trends, inflation data, banking reforms, trade flows, political stability, investment, institutional strength, public confidence. Those factors tell the real story. At the end of the day, no one outside Iraq's policy circles controls the official exchange rate. Decisions of that scale involve complex analysis, risk assessment, investment, and strategic planning far beyond public view. All we can do is stay informed, stay realistic, and avoid getting pulled into emotional narratives. Investment, whether overly optimistic or overly pessimistic, because the truth is economies evolve over years, not hours. If you made it through all three parts, investment, you now have a much clearer understanding of how the official exchange rate fits into Iraq's broader economic journey, not just as a headline topic, investment, but as a strategic component of national development. Stay patient, stay grounded, and protect your financial well-being first. Investment. And as always, I'll see you in the next one.